Welcome back, Metals, Money, and Markets. We're at October 12th. For MiningClips.com, I'm Rob Goodman and Mickey Fulp, the Mercenary Geologist. We'll make some sense out of these numbers. Okay, Mickey, quite a week in the markets here. U.S. equities getting bloodied here. Dollar down a little bit. Gold, a nice little rally here. Let's start there.
Well, we had a two-day market meltdown. It should not have been unexpected the way the markets have been on a roll. Gold finally got some safe haven love. Closed the week at 12.17 and is basically up the last 2 days, is starting really on Thursday afternoon after market close, up 1.2%. Platinum, which is the other precious metal that's a safe haven, if you will, closed at 837, up almost 2%. But silver and palladium, they did not participate in this rally at all. Silver was down 4 cents to 14.59. Platinum lost $7 to close at 10.62. And the reason really is these are industrial metals, even though they have precious metal prices.
And copper had a decent week. You're up 2%.
Yeah, copper had a really nice week, but that nice week was really over the last day or two. Closed at 286, up 2%. Despite the major market meltdown, it bucked that trend, and there was a couple of things that happened over the last couple of days. We had some supply disruption. The Chuki commodities smelter, which is the world's largest, but it's quite antiquated, announcement that it was going to be shut down for 60 to 80 days. Now, that total smelted copper is less than 1 day in the annual copper supply. But when combined with record Chinese imports, which came out today, copper rose considerably. But get this, Rob, it is still in huge backwardation, something that I've never seen quite before by any stretch of imagination. 14 months out, it is in backwardation. So the market thinks that copper demand is now, and they're really discounting copper demand going forward, and that has to be because of this trade tariff stuff with China.
And shifting gears, the energy markets pretty flat for uranium this week, but oil finally got that winning streak broken, off almost 4%.
Well, uranium, as we mentioned before, continues to consolidate in the 27.50 level. It was up 3 cents to close at 27.58. Oil was hit not only by the equity market being down, but a very unexpected U.S. inventory buildup of 6 million barrels over the week. Record production from the U.S., 11.2 million barrels. Gasoline supplies up 1 million barrels. That has to do a lot with the end of summer driving season and also scheduled refinery maintenance starting up very soon. And the rigs were up 11. Demand, according to the AIA, is now approaching 100 million barrels a day worldwide. This all kind of weighed on the oil market, closed at 71.58, down almost 4%. But I really think that oil got ahead of itself. Here's a tidbit of news. Fracking is now okay in the United Kingdom after a moratorium of 7 years.
Okay, heading over here to these currency markets. Dollar takes a breather this week, and the loonie actually goes red as well.
Well, the dollar closed at its 1 month low yesterday. It was up a bit today, but it closed at 95.27 for a 0.4% loss. Euro, of course, was up 0.4% to 115.6. Loonie, 3 weeks in a row on the losing side, closed at 76.71. Not sure exactly why that happened, but it did, and we'll leave it at that.
And heading up these U.S. markets here, we've got quite a bloodbath here across the board. We already talked about it at the start, but let's run through the numbers here with the Dow off over 4%.
Well, all the major U.S. markets basically on 3-week losses now. The Dow closed at 25,340, down 4.2%. It lost massively on Wednesday and Thursday. It recovered quite a bit, recovered about 1% today. but that's still over a 4% loss on the week. S&P 500 2767, also a 4% loss. NASDAQ climbed up considerably today, but it's at 74.97, a little less than a 4% loss. The VIX is at 25. We haven't seen those numbers for several months now. A lot of this is driven by interest rates, which 10-year Treasury remains about 3.15%. This market was overbought with low liquidity. It's also October, which is historically a bad month for U.S. stock markets. And the downturn was led by FANGs, the high-tech stocks, and they got brutalized. They recovered a bit today. All these markets, including the Russell 2000, are now below their 200-day moving averages, so they're vulnerable right now. I think the real question has to be, were the U.S. markets front run by all the other world markets? Because we have been the only strong performers this year, taken in whole, and I think that would be the fear, that we're just now catching up with the bear markets worldwide.
And speaking of that, wrapping up with the Toronto Venture Exchange falls below 700.
Yeah, it's lost 7 points on a week, down 1%, 3 weeks in a row. We are now below 700, which we haven't closed a week at that since the middle of the summer doldrums in mid-August. For those out there, including some of my newsletter writer and talking head peers who promulgate the idea that the venture exchange gold stocks are not affected by major markets, I'm going to call BS on that, and that's evidence this week. These are high-risk, high-reward stocks. When major markets do poorly, the Toronto Venture Exchange will follow suit.
Okay, Mickey, appreciate the insight as always, and we'll certainly keep our eye on the newswire this week. So enjoy your weekend, and we will catch you next Friday.
All right, thanks a lot, Rob.